from Fremont Mortgage. It's our Mortgage Monday segment. You want to say something about Josie's report of scams?
Yeah, well, first of all, foreclosure consultants in Maryland have to be licensed now as part of all the new foreclosure laws. And then the other thing, while those numbers are bad, make sure viewers understand that what happened was that was emergency legislation. It goes into effect July 1st, the new foreclosure laws. They forced them to go to mediation and try a loan mod before they foreclose. A lot of lenders rushed to foreclosure filings before this went into effect because they were afraid it was emergency legislation. So that's why we saw a big uptick. The situation is bad, but there was a lot of extra ones added because of that.
Okay. All right. I want to hit you up with what's going on here tonight.
Okay.
The Pier Homes down there at the waterfront, Harborview. What's this going to do for the market here?
It's not going to be, I mean, if you're looking to buy a home, you might get a great deal at this auction. There's several of these ones that are going to go for absolute minimum, so there's no reserve, but there's other ones that do have some reserves built in. I did speak to one of the leading auctioneers about this, and he said, you know, the bad thing is there's people who bought these homes, and he knew one client that paid, I think, $700,000, $800,000. She was offered $600,000, she turned it down. So what's going to happen to people who bought ahead of the game? They're going to be hurt because now the comps are going to be lower, and anyone who's refinanced in that area in Baltimore for condos is going to be hurt because if these things go as low as we think, that's going to set the new price range.
All right, so you have the prices low, and you have the mortgage interest rates low. Then people who aren't looking to buy are now all of a sudden looking, so won't that spur that market on?
It could, but one thing about the condos you have to look at is, one, there's a lot of rules with condos. If so many people are behind on the condo fees, that could prevent you from getting conventional financing. In addition, you also have to look at what all the condo fees are. Sometimes the property taxes of condos fees could add almost a half of another normal mortgage payment. So some people don't realize, wow, I'll get in for a good price. There's $1,000 a month in condo fees and all these other fees. So that adds up to a lot. You have to take that into account. But rates right now, Freddie Mac, and it's in about 40-year history, lowest in the survey.
I'm going to come back to the mortgage rates in just a second, but the home tonight, I read $1.2 million was the original asking price. You have to have an auction bid, the minimum $329. So in your gut, what do you think the going rate would be?
If it goes, I don't know. It's hard to say. I'd probably say somewhere between maybe like $500,000-600,000 maybe.
That's still 50% off.
Yeah, but you have to look. Tom Clancy just paid $12 million for right down the street for 2 condos he put together, 2 penthouse condos. So I guess the haves and the have-nots. It's tough out there. All
right, let's talk about the mortgage rates. Everywhere you go, on your radio, I hear it every day, every Sunday when you're on. And right here, the number one question is, how low are they going to go?
Exactly. Everyone keeps asking how. It's hard to really say. I mean, let's look at it this way. From a logical standpoint, there's not a whole lot more room we can go down, but there's a lot more room we can go up. But as long as we continue to get this bad economic news, Friday we have the jobs report. I really don't expect it to be great. But right now, the market is I guess, braced itself for even mediocre news. They seem jubilant over, like, oh, wow, you know, those numbers aren't as bad as we thought. They still stink, but they get excited to see the market go up a little bit. Bad economic news is good for mortgage rates. Right now, there's a lot of bad economic news, so rates have been staying low, which is really surprising. We talked about it last week. After the Fed exited the market of buying back securities, artificially keeping rates down, everyone, including myself, thought rates would eventually start inching up. And we're seeing the exact opposite. Rates are starting inching back down again. So the problem is the programs are so limited. With these new rules and guidelines, it's getting tougher and tougher to get approved. So we're just counseling clients, be prepared. When we say we need something, we need it right away because the clock's ticking with rate locks, and rates could go up. But again, the rules are changing with these appraisal rules and everything else.
Are you seeing any rush to sell a home to get out and go, lower it? I mean, lower the house, from a 4-bedroom down to a 2-bedroom,
Some people are, but some people are underwater, so they can't. People who think, wow, I could really use the downsize, but they don't have the equity or they have no equity in the house, so they can't move out. They have to do a short sale, which prevents them from financing the next home. That's the problem. There's just all this give and take that has to happen to make it work. And as we always said, when you have the foreclosures, the loan modifications, the short sales, bankruptcies are getting to be high again. All those things knock for the next 2 to 4 to 7 years out of the market. So those people aren't going to be able to buy anymore, and inventory keeps building up. But we are seeing still a good amount of purchase contracts. People are still buying. We're working on a bunch right now. And sellers are creative. They're saying, look, I'll give you 6% seller help, or I'll do this, or I'll do that. They're working a little bit. So you're starting to see a lot more of this negotiating part. The trick to barbers is, don't insult your buyer, your seller. I mean, when you go out there, if he's asking $250,000, don't say I'll give you $150 and think that's you're going to start and find some place in the middle. You use your realtor, find a good realtor and a good lender because you really need experienced people right now. I'm amazed at some of the questions I get when I speak at different meetings or anything else from industry professionals, realtors, title companies, mortgage people that don't know some of the rules that are going on, and that's dangerous when you're counseling someone to do something and you don't realize that you can't do that anymore. This rule, they got rid of that 3 months ago, and then they submit a contract that way. You got a person who's all excited they finally got a contract after having a house in the market for 6 months. That contract's not going through because a person doesn't qualify because of a rule that happened that they should know about. So choose your lenders, your realtors, everyone wisely. It's more important now than ever.
All right, Carl Delmont from Fremont Mortgage. He's here every Monday for Mortgage Monday, and I'll be anxious to see what happens tonight.
I've watched it too. We'll talk about it.
We'll find it. All right, Cherie.
Okay.